So Tesla's reporting earnings after the bell today. You guys probably already knew that. So in this video, we're going to break down the chart, how Tesla stock is doing right now, and we'll go over the projections and some numbers and some key information that just came out today. So if you all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo. Link down below. It's free money. We'll talk more about that later. And now let's dive into it. So again, Tesla's reporting earnings after the bell today, and their stock's currently down about 2%, 1.9% to be exact. And what we're noticing here is, well, we took out the lows from yesterday right off the bat. Yesterday, we were pretty much holding tight around 183 bucks, you guys can see. And well, this morning we hit 177 bucks a share. We're down, well, we were down at one point, I think almost 4%, 3.5%. And since that point where we hit 177, we have rallied a little bit to about 180, but it doesn't look like that's going to hold for much longer. We actually have, head and shoulders forming here on the intraday chart, and at any minute this could end up dumping back under 180, under the 180 SMA here on the 1 day 1 minute chart, and this could go back and test the lows potentially from this morning, which again, those lows were 177 bucks. And if we pull up the 4-hour chart here on Tesla stock, guys, what are we noticing? Well, we have a wedge. You guys see that, lower highs and higher lows being made at the same time, and we're holding on by a thread right at 175 bucks a share. Now I'm telling you, if that does end up breaking, we could fill the gap down to 165. That was the high from the middle of March, and if 165 were to break, it could be a free fall collapse at that point in terms of Tesla stock. And of course, we don't know exactly if that's going to happen, when that's going to happen, if it does even happen, but all I know is technically we're at a point here where things could get ugly for the bulls very, very quickly. So they're reporting earnings after the bell today. Let me actually pull up the Safari tab, then we'll break down some numbers here that they're expected to do, just to refresh your memory, because I'm sure a lot of you don't remember what Tesla's actually looking to report today. So right now, Tesla's market cap is $575 billion, which is a pretty large amount of money there, guys. Huge company, right? Their EPS trailing 12 months is $3.58, and their PE ratio is roughly 50 points right now for trailing 12 months, which is a lot lower than what it once was, but arguably still very high, depending on who you're talking to, right, guys? A lot of people think Tesla's overvalued. Some think it's undervalued. We're not going to get into that debate in this video, but let's go to the analysis tab here and see what they're projecting for earnings for the first quarter. So what we're noticing here is 26 analysts, based on 26 analysts, average estimate is 85 cents for EPS, low estimate is 69 cents, and the high estimate is $1.06. And you guys can see here, a year ago, they did $1.07 in EPS. You guys see that right there. When it comes to revenue on 22 analysts, they see average revenue of $23.21 billion, low estimate $20.23, high estimate of $25 billion, and a year ago they did $18.76 billion. So either way, guys, they're going to be growing year over year, whether they come in at the high estimate, low estimate, average estimate, whatever it may be, they're going to be growing year over year, and sales growth right now is expected to be 27%, or rather 23.7%. Not too bad. You guys see that right there. So expect some decent revenue growth out of Tesla, and of course for them to be profitable again, which they have been profitable now for a good amount of time, not a crazy amount of time, but a good amount of time, right? And when we come here to this article, we can see Tesla dropped the starting prices for its top 2 selling models overnight again, which is the company's 4th price cut in the United States this year. So they're really cutting those prices, trying to get their cars into more hands of people in the United States, which makes sense to me, guys. They're trying to get this car out to the masses, and there's 2 different ways to look at this. A lot of people think, oh, demand's dying down, so they have to cut prices. There's that angle, and there's the other angle where demand is still very strong. They just want to get the cars into as many hands as possible with the Model 3 and the Model Y, and wait till that next model comes out, the $20,000 model, then it's going to be going into even more hands of Americans. So the company dropped the prices by $3,000, or around 6% off the starting prices for all 3 versions of the Model Y, which is Tesla's top seller, and it also cut $2,000, or about 5%, from its starting price of the Model 3, which is is also a very popular version of Tesla, model of Tesla that's being sold at this point. You guys know that, right? Obviously. And you guys can see here, Tesla could have cut the Model 3 prices to make more cars loaded with options eligible for the U.S. government's $7,500 electric vehicle tax credit. With options, some Model 3s would actually exceed the government's $55,000 price limit for cars to be eligible for the credit. So that's another reason why maybe they're cutting these prices, guys. And some analysts say demand may be slowing for the company's vehicles as more competition enters the market, and others say Tesla is using its high profit margins to take market share from competitors. Again, there's two sides of this argument, and I believe really it's Tesla is taking advantage of their high margins, profit margins, to get more market share. It only makes sense, right? It only makes sense when Tesla has such a huge margin compared to other automobile companies, that they're going to cut prices a little bit, which is going to affect margin, but they're going to be able to reach more people with their cars. So that's a big piece of news that ended up coming out. They're cutting prices again for the fourth time in the U.S. And again, be mindful, guys. Earnings are coming out after the bell. It's going to be a big day for Tesla, needless to say. And if I pull up the chart again, guys, this is pretty, it's going to be a pretty interesting next couple of days, next 24, 48 hours here for the stock. As again, like I said, we are clearly trading in this wedge, and it doesn't seem like it wants to pick direction quite yet. I mean, you could argue that the bears are an advantage here, considering they are, the stock is under the moving averages. We have a death cross, and you could argue that, but Tesla is known to pop out of nowhere, go ballistic out of nowhere, especially during earnings. So it really could spike up past the moving averages for all we know. So we have to be mindful of that, and we have to be patient. And for me personally, guys, I'm not touching Tesla until the earnings actually come out. I'm not an earnings gambler. I don't like buying stocks before earnings and praying and hoping it goes up or down, or buying calls or puts or anything like that. So I'm going to just be patient and see what direction we end up picking. I have multiple alerts set, one at 165, 175, 195, 205. So we'll see what direction we pick. If we fall under 175, like I said, we could fill the gap down maybe to 165, which was that low from the middle of March. But if we break 195, we start taking out the moving averages, the highs from the last couple of days, we can start running 205, maybe even higher than that. Maybe we start breaking the wedge, taking the highs out from the end of March, being about 205. Then we get a huge leg up. Maybe we start going 215, 220, which was the high from the beginning of February, mid-February, even end of February. This could get hot or it could dump. It could go either way based on how the chart is looking like right now. At least that's my personal opinion, guys. What do you think? Let me know your thoughts down below in the comments. And if you haven't gotten up to 15 stocks yet for Moomoo, what are you waiting for? Use that link down below, or go to stassurfest.com/Moomoo. Once you guys open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 free shares of stock. And listen to this, if you deposit at least $1,000 onto the Moomoo platform, you get another 10 stocks, totaling 15 free stocks. So yeah, if you guys want some free money, who doesn't like free money? Use that Moomoo link down below. And of course, it also helps out the channel. Feel free to hit that like button, subscribe. Don't forget to also get 12 stocks from Webull, and to check out my Patreon. All the details are linked down below. And with that being said, yeah, that's it for the video. And my goodness, guys, if you've seen Bed Bath & Beyond stock today, we're going to make another video on that stock later on today. It is up 55%. My freaking goodness, guys. So get ready for that. I'll see you in the next video. Cheers. I'll see you later.